Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. So another week and another highly anticipated money making opportunity. That is one of the most lucrative trends of the current financial climate that we find ourselves in right now. In today's highly macro driven markets, they are fueling one of the greatest wealth creation opportunities the world has seen. Throughout our reports, we have routinely highlighted commodity markets. They will move in very predictable trends, presenting savvy traders with a series of highly profitable opportunities to capitalize on these huge macro driven rallies as well as the pullbacks. But make no mistake, this is not a buy and hold market. In these exciting and fast moving markets, they are creating the most optimized environment for traders, or as some of the world's most powerful Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, are calling it, it is the golden age of trading. So far in the first quarter of 2025, we have seen commodity markets notching up explosive double-digit gains to the upside and the downside in a single week, sometimes in a single day, not once, not twice, but on multiple occasions. For commodity traders, making money in these markets has never been so easy. The week to week, short term, macro driven trend that we're seeing play out in 2025 can literally be summarized as buy low, sell high, rinse and repeat, and do it all over again. Take last week, for example, following the explosive rally that catapulted gold to new record highs of 2,956 US dollars per ounce, extending its record gain to 14 new all-time highs in 2025 so far. Prices, they've now pulled back as traders bank windfall amount of profits, ready to capitalize on the precious metals' next big move. Is the rally over? Has all the money been made? Well, data released earlier on this month, it shows that global demand for gold has never been stronger, with a multitude of bullish tailwinds, including President Donald Trump's tariffs, which threaten to ignite a new era of trade wars and global uncertainty. Last week, Trump hot-listed Europe as the next target, announcing plans to impose 25% tariffs on imports from the European Union. As President Trump's erratic foreign policies, they stir up a new wave of inflationary pressures. Concerns over stagflation, they have re-emerged as a real possibility on rising expectation that Trump's America First policies, they will hurt the global economy and limit central banks' ability to maneuver. Historically, there has always been a positive correlation between tariffs and gold prices moving higher. The longer the tariffs go on, the more this is going to disrupt global trade and fuel inflation. Another major catalyst is central banks around the world continuing to accumulate gold at a record-setting pace as they aggressively diversify away from the US dollar. Our proprietary data, tracked by our research team, that shows that central banks, they bought more than 1,000 tons of gold last year for the third consecutive year in a row. That trend is expected to accelerate in 2025 as central banks continue to turn to gold as a hedge against inflation, currency instability, and geopolitical risks. And it's not just central banks. Right now, the world is experiencing a run on physical gold like we've never seen before. Interestingly, the US is leading the pack in gobbling up a vast quantity of available gold internationally, which could ultimately lead to a shortage and drive up prices. Since President Trump's inauguration, traders and financial institutions, they have been amassing stockpiles of gold on the COMEX, the New York Commodity Exchange. In return, America's new gold rush that has drained commercial vaults in London, Switzerland, and Singapore. Let's not forget ballooning global debt, uncontrollable government borrowing, which currently sits at a record 315 trillion. That in itself is yet another major catalyst fueling a global rush for gold, making allocation for the precious metal in a diversified portfolio an essential necessity. Over in the United States, the Congressional Budget Office, they forecast that US debt to GDP ratio that will exceed 150% by 2034 from 99% at present. In other words, that will slingshot the nation's debt to the highest level in US history. Interestingly, there's a strong correlation between US debt and gold prices. Conclusive evidence shows that during the period that US national debt ballooned from $5 trillion to $35 trillion, gold prices have risen by 10x since 2000. That's a staggering gain of over 826% since the beginning of the century. And last but definitely not least is the deglobalization movement, which is officially entering a new phase of expectations on incoming trade wars, tit-for-tat tariffs, and protectionist policies forcing countries around the world to prioritize the national interest over the global good. This is one of the most inflationary factors of all that is guaranteed to keep gold demand elevated and continue to drive prices a lot higher from the current levels. Gold is not the only precious metal delivering massive returns. Silver has been on a huge run over the past year, rallying from just under $20 an ounce to rocket above $33.50 per ounce just last month, hitting its highest level in more than 12 years. Now, silver's stealth bull run has come out of hiding. There's no denying that the precious metal, it is capturing the world's attention like never before. Last time silver prices broke above $33 an ounce, the precious metal went on to trade to $50 an ounce the very same year. If this is a leading barometer for predicting the future performance of silver prices, this ultimately means one thing. Silver prices, they're heading in one direction from here, and that is, of course, up. Whichever way you look at it, one thing is very clear. The case for precious metals in a well-diversified portfolio, that has never been more obvious than it is right now. Any substantial pullback should be viewed as buying opportunities because prices won't stay low for long. A number of the world's largest commodity trading firms, they have declared making multi-billions of dollars in profit from commodities, and we're still only in the first quarter of 2025. In fact, with everything that is currently happening on the global macro front, 2025, it is now officially on track to be one of the Gold and Silver Club's biggest and most profitable years in our 15-year history. Our clients have already made in excess of 6, 7, 8-figure returns so far this year, and we're only at the beginning of March. To put that another way, the majority of our clients at the Gold and Silver Club, they've already made more money in the first 2 months of 2025 than they made in the entire 12 months of last year. Extraordinary times, they create extraordinary opportunities. Right now, as traders, we're living in some of the most exciting and rewarding times ever in history. It's times like these that make millionaires and billionaires out of regular people. Whatever long-term goal you're looking to achieve through trading, whether that is to create a full-time income, a second replacement income, or just to earn a better return on your savings, now is the time to take action. Right now, you have an opportunity to make 2025 your biggest and best yet, which, based on our research, it is going to be another blockbuster year due to all the current macroeconomic events that are unfolding. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we have transparently documented through our weekly videos. If you're trading at one lot, that's $100,000. If you're trading at 10 lots, that's $1 million. As you can see from our testimonials, the majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They have already made in excess of 6, 7, 8-figure returns, and we're not even a quarter of the way through the year. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, but you still want to make 2025 your best ever, go to jointhegoldandsilverclub.com now to learn how our mentorship program can take your trading to the next level. Investing in yourself, it is the best investment you will ever make. Make investing in yourself a priority because nobody else is going to do that for you. So with that, let's move over to the charts. We'll talk you through exactly what we're looking at as we go into a new week. So firstly, we have taken the opportunity over the last week to now build into half a dozen positions on Palladium. So I'm pleased to say that every single Palladium position that we built into in the last week is now in profit. Palladium is breaking out to kick off the week just under 2% on the day here. Lovely move to the upside. We're almost back at 940 US dollars per ounce. So last week we talked you through the opportunity here to be buying back at the price swing lows. Palladium, of course, had the meltdown last week. It broke down by more than 1,000 points, tagged the price swing lows. This is where we swooped in with our clients at the Gold and Silver Club, built half a dozen trades on this market. All of those positions are in profit. You can see right now, Palladium is limit up. Very straightforward opportunity for you to take advantage of on this market. We've been waiting for a while here for the price to break back down towards key areas of liquidity for us to load up, and essentially the rest is history. We've taken the opportunity to build 6 positions with our clients at the Gold and Silver Club. Every single Palladium position that we've built into in the last week is in profit, fast profits on this market. Platinum, we've got the same situation here. So essentially, Platinum right now is starting off the week with a 1% breakout to the upside, reclaiming back above 960 US dollars per ounce. We've got 7 positions on this market. Platinum right now, very much like Palladium, both these markets, they're correlated. They tend to move in lockstep together. Both of them have retested the price swing lows. Both of them are starting off the week strong here as we head into the first week of March. We discussed this with you last week, that traditionally and historically, First week of March is going to see risk on across multiple assets here. The beneficiary of that would, of course, be commodities. Take the opportunities last week at the end of February here with the end of February outflows to swoop in and buy your favorite commodities and your favorite assets at a massive discount. Oil being one of these as well. So WTI crude oil is trading just under $70 per barrel at the moment. It's at 69.78. So of course you would imagine at the Gold and Silver Club here with our clients, we've taken the opportunity over the last week to stack and build out our position here on WTI crude oil. Best prices we were able to get were just above the 68.50 level last week with several taps into that area of liquidity. It was fantastic, enabling us to build into multiple trades on this market. We've seen the same setup here playing out with Brent crude oil, same setup on heating oil, same setup here on gasoline, which gapped up significantly higher with the contract rollover at the start of the week. So essentially we're bullish on all of these right now. Gasoline, heating oil, WTI crude oil, Brent crude oil. We've loaded up the truck here on the retest back down towards $68.50 per barrel. Last week, you can see oil is starting off the week, getting a bid right now, alongside the other metals such as platinum, palladium, and of course, gold and silver are now getting the bid too. Gold, we discussed it with you last week at that 2,950 level. Price action was getting very sticky. Subsequently, gold on profit taking sold off over 1,000 points to the downside, but it's now getting supported just under $2,900 per ounce. Silver, very similar as well. We're currently seeing on 1% breakout to the upside right now to kick off the beginning of the week. Now, historically, the beginning of March here, you do see fresh capital inflows into the market. We're seeing this across multiple risk on assets and commodities here to really start off this month with a bang. So I hope that many of you have capitalized, especially on the Palladium trade, which is absolutely flying to start off the week here. And I hope you manage to swoop in and get some great prices on crude oil as well. And of course, whatever long-term goal you're looking to achieve through trading, whether that is to create a full-time income, a secondary replacement income, or just to earn a better return on your savings, now is the time to take action. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven, and artificial intelligence-powered approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and cutting edge artificial intelligence insights to make confident decisions with accuracy and precision. There's a massive gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis, gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99%, into the top 1% who are actually crushing it, making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, artificial intelligence-driven approach, or you'll just end up wasting lots of time, money, and effort. You'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive, data-driven and artificial intelligence-powered approach that is never taught to retail traders, only reserved for professional traders in the banks, the hedge funds, with access to powerful game-changing insights, including where the banks and hedge funds, where they're buying and selling in real time, further compound this with the key liquidity zones so you can enter and exit the markets with pinpoint precision. Combine this with the fundamentals, the macroeconomics, capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. Right now, we're in one of the greatest eras of wealth creation the world has seen. If you want to successfully capitalize on these huge money-making opportunities, build significant, life-changing wealth, there's no better time than now. If you want to upgrade your income, you have to upgrade your skills. Never underestimate what you can achieve in the next 3, 6, or even 12 months from now with the right guidance and mentorship. Time, it is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders, take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application. We will get in touch ASAP.